Hi, I'm Melissa Bill, and welcome to the Business Roundup, where we catch up with the movers and shakers in the business world. Today, joining me is Cole Snell. He's the CEO of Real Private Credit. Thank you so much for joining me today.
Thanks for having me, Melissa. I'm excited to be here.
So definitely, we're going to tackle some different things about fraud in private credit, how it's detected today, the advancements that are being made. Before we kind of dive into some of those topics and get into it, do you mind kind of just sharing a little bit about your background and why you founded the company and kind of how, everything came to
Sure.
be?
Yeah, of course. And this is my favorite thing to talk about by far. I'm a career founder. I've been if I was ever an employee at any point in my life, I was very average at it. Let's put it that way. So I like to think I'm a better founder than I am an employee. But I surround myself with really exceptional people, and my biggest strength is probably team building. And second to that, finding use case for innovation. It was an exit in the food space that drove me to blockchain technology about 8 years ago. And I actually managed to squeeze out a nice exit in the RWA, or the real world asset space, with a company called Infinio that I founded, where we were tokenizing insurance, and specific life insurance. We put about $1 billion worth of that asset class on chain. And then there was an event, and it allowed me to exit and move into the private credit space. That was has always been extremely interesting to me from a use case perspective. People speak about blockchain often, and they describe it as a solution looking for a problem, or a problem looking for a solution. I'm not really sure which one it is some days, but all I know is that there's been a venture capital bonfire of good intentioned founders burning VC money trying to find a round hole and a round peg to fit together. So, here I am now after 8 years of experience in building in the real world asset space, thinking that I think I've found the holy grail of use cases.
And that's a good point. Now, have you always been more in like a technology type sector, or like where do you like really find like where you really feel like the most, I don't want to say innovative, where you want to get into more innovation?
Yeah, I mean, my education was in naturopathic medicine. I had my first business. I had a chain of clinics. Patients would come in and see me. This is more than 25 years ago. And they would say, "Hey, I want to get healthier." I would say, "Great, buy a good pair of shoes and eat better," essentially. And so the diet was a conundrum. Getting a good pair of shoes and going for a walk was pretty affordable and pretty achievable. It was the diet that was really interesting. And so I managed to package that business up and sell it, and moved into the food space because I felt that there was an opportunity to add value to people's lives by educating them around the foods that they eat. And, my attitude about food was, well, if you don't eat, you die. So let's add value to our food. I was well-timed. I built an international business selling to Whole Foods and Costco and Kroger, Wegmans were all my customers. And we had a whole food service division selling to some of the highest end restaurants in America. And I learned really quickly that food was not the lowest common denominator. It's money. And the reason I determined that it was money is because we don't forage or grow our food. We buy it. And people can't afford really good quality food. So I managed to package up that business, sell it, and moved into the financial technology space because I wanted to add value to money. I wanted to add value to people's relationship with money. I believe money is the lowest common denominator. Without it, you can't eat. You don't have a lot of things, but people don't understand it. And I believe that money and the democratization of money through technology, by getting rid of all the highbrow acronym financial speak and connecting buyers to sellers and borrowers to lenders using essentially blockchain and now AI to some degree.
I know that's true. It's definitely opening up the doors for a lot more. And now fraud in private credit is something that is, as far as detected today. And where do you see some of the biggest risks in that area existing?
Oh, I mean, private credit is become a massive market. It's growing extremely fast. It's a 1.5 trillion, projected 3 trillion, depending on what aspect of private credit you're looking at. The infrastructure is dangerously fragmented. The system is kind of propped up by this 50-state UCC, Uniform Commercial Code, filing system that acts as securitized or perfective collateral interest that is extremely opaque. Our exploitable blind spots, borrowers pledging the same collateral multiple times. This year, 2025, we had a huge wake-up call where Tricolor took a couple banks and First Brands for hundreds of millions of dollars. JP Morgan was on the hook for like 170 million. And Fifth and Third, I think, were hit for 200 million alone. So, all of these manual verification processes, it takes weeks if there's a bad actor to find these critical red flags. So that was the big, and I ended up looking really smart because my team we were building a solution for this about 3 months before Tricolor and First Brands happened. There's been a lot of people building in the space. There's a big land grab kind of going on. And then all of a sudden Tricolor and First Brands happened and everyone just like piled into kind of using AI, not so much blockchain, to find solutions for these problems. It was a horrible thing to happen, but investors were just left kind of holding the bag on this. It was really terrible.
In the situation. And now what does Real Private Credit? What are some of the things that you do?
So we build essentially solutions, for this. We are very, very passionate about tokenization. And we're really practical about tokenization. To say that we use AI, I probably shouldn't. So I don't swear very often, and I won't swear on your podcast. But if I could, I would say when people talk about AI, I'm like, no bleep, you're using AI, right? Like, no bleep, you're using AI. No kidding, you're using. No S, you're using AI, right? You can't not use AI today. So when people are touting AI, it's like, I don't even know what they're. Of course you are. So our mode is blockchain. Blockchain, we use AI like everybody else does to put, I would say, truth over trust on chain. It's a very important way to think about it. I have to think about it sometimes because I get the T's kind of mixed up, but it's definitely truth over trust. We want to replace that. The entire industry has been dependent on a trust-based system. And when you have a trust-based system, like an old boys club, kind of shaking hands and lending money to people because you trust them, well, that's just not good enough. There's huge issues. So we build solutions for a very kind of thin slice for now of the private credit market that allows for not just new financial rails and tokenization and efficiencies and truth, but clarity on the assets, super perfection, we call it. But we also offer legal solutions and putting law on chain. This is very innovative, and people have not been talking about putting the law that governs the secured interest of these assets on chain. It's a very, very interesting use case.
That is that's pretty cool. And now, how is Real PC built, like the AI powered early warning system? I know you mentioned it a little bit. And I know this is all 50 state UCC filing systems.
Correct. Yeah. It's not really super complicated. I'd love to say that we were on some cutting edge technology. We use, what's there. We use data. It's kind of cloud-based aggregating of UCC filings from all 50 states in basically a single searchable database. Now, we layer on top of that database 4 other databases, to be able to tell a real credit story. So we have a data ingestion layer, essentially custom web scrapers that are designed for each unique state. There's a standardization engine, which is really important, which normalizes our AI third-party name changes across different asset descriptions, which is really important. There's a machine learning aspect of it, looking for duplicate collateral. Think of it as like a continuous lien audit or autopilot system. Your real time, we got to be careful about the term real time in technology. People throw it around. Real time isn't real time. I think a better word for real time is continuous. So we have a continuous autopilot monitoring 24/7. What most lenders only check at closing or during periodic kind of reviews. So if you think about what this does to the velocity of private credit lending, it decreases the risk, it increases the flywheel to do more deals. We're not saying that we can reduce the cost of capital necessarily. Capital costs are actually very efficient right now, but the system very much improves. And this is a bit of an AI kind of agentic approach where the system actually approves all the time. I mean, our CTO built the entire EWS or early warning system that I just described, writing 0 lines of code. He's just vibe coding just like everybody else, even though he's been coding, hard coding for 30 years. He wrote 0 lines of code. CTOs don't write code anymore. They shouldn't be.
And now with this, how does this provide lenders real time? You kind of talked a little bit about it, but visibility into asset level risks and potential fraud.
Right, sure. So you got a 50 state wide seconds, not days or weeks search. So it's transforming due diligence. It's the real time or that continuous fraud detection pattern. Again, automated risk scoring, which is really important. Comprehensive debtor footprint, which is very also extremely important. Think of it as like preventing losses before they occur of sorts. And it's, think of it as a single source of truth for the secured lending landscape.
And I know, like, some of the things, what are some of the things that you're seeing the most? You talked a little bit about the fraud. What are some of the more common things that you're seeing?
We're seeing private credit asset originators that focus primarily on small, medium business lending pile into tokenization. These are kind of medium-sized, small to medium-sized businesses. The total addressable market for these businesses is $500 billion to about $1 trillion. Again, it's a sliver. They are able to take advantage of statewide legal language issued by the Secretary of State in now 30 different states that's defined by something called Uniform Commercial Code Article 12, which is very, very exciting. It basically simply says, put your assets on chain and you will have more security. That's what it is, to oversimplify it. I could go on a total rabbit hole talking about it. It's very exciting. So yeah, I mean, that's the big thing that we're seeing right now is, I mean, our phone is ringing off the hook with these kind of mid-tier, small, medium business lenders, asset originators that are looking to service like merchant cash advance, invoice factoring, inventory factoring, SMB, kind of collateralized or non-collateralized loans, essentially. And there's an amazing use case for these businesses. And then above that would be any warehouse lenders for non-bank lenders that are helping fund these deals.
Now, you mentioned Article 12. Can you discuss a little bit about UCC Article 9? That's something and then you already talked about the UCC. What is Article 9?
Sure. Yeah. These are like really boring and really important aspects of this kind of like sliver of private credit that nobody wants to talk about, that I'm so excited about. Really, UCC Article 9 is the traditional framework, essentially, that governs secure transaction through paper-based filing systems. They were designed it was designed kind of like pre-digital era, and then came in Article 12, which is the real game changer. It's now, like I mentioned, adopted by about 30 different states and growing, and it provides a legal clarity for something called a CER, which is a controllable electronic record. It essentially is digital assets with cryptographic control. What does that all mean? It's like the key innovation around it all is kind of moving from a UCC 9 description to a UCC 12 description. Is essentially the party holding the digital token has preferred security interest. This is really, what it is. There's something within all of this called the transfer rule that is also even more esoteric and more exciting. And it states, essentially in all 30 states that have adopted UCC 12, that you have a window to move your UCC 1 filing to essentially a CER, a controllable electronic record, and if not, risk losing your priority position, because in a court of law, the person that essentially is holding their asset digitally will win over the person with a traditional paper filing. I mean, it's a really big deal, but again, no one's really talking about it. I mean, we are, because there's a few law firms out there. We have 3 attorneys that work at our company, so we're not a law firm, but we're very kind of legal heavy, if you will. I mean, this is a subject I could go on and on about. It's really exciting for, private credit. And the cool thing about private credit, like if you get into the weeds of what really private credit is a private credit and the success of private credit and the security of private credit is really good. If you think about a small, medium business that is bring on capital to fund their business, this is the lifeblood of America. I mean, we need these businesses to be successful. We need to encourage people to open up businesses. It's hard, and our passion is to make it easier, to bring the factor rates down, to bring the cost of the borrower capital down. The cost of the originator capital is pretty efficient, but the borrower capital is not efficient at the end of the day. I mean, there's factor rates of 1.4, 1.5. These APRs are like in the hundreds of percent after, so there's an opportunity to lend small businesses money at a much more reasonable rate, but then also for the asset originators and the lenders to allow them to also make more money by bringing some of their costs down, but then doing more deals, being able to spin that flywheel over and over. And that's the beautiful thing about the EWS underwriting, plus the transparency and the efficiency of blockchain.
So that's something exciting. You were talking earlier is, democratizing that. So do you think in the future this can help to allow more, small businesses to flourish and just kind of just allow that to be a little bit more fluid?
Yeah, 100%. I mean, it's very difficult for asset originators and lenders to small businesses. I mean, first off, banks are just kind of out of the game, right? Like banks have just, generally speaking, stopped lending money to everybody. They're very, very, very conservative. Banks traditionally now want to be more of a warehouse, type role, or more of an institutional type role. So there's a huge opportunity to lend money to small, medium businesses from the private sector, what we call, private credit, non-bank lenders, essentially. But often these loans are a nail in the coffin for businesses because they're just so expensive. So the rates need to come down, and it needs to the business owner and operator needs to be assured that they can use this capital efficiently and pay it back, and then recycle it and take another loan to continue to grow their business.
That makes sense. And now you work with companies on basically globally on a global level.
Right. Right now we're working in three different countries, domestic in the United States, in all 50 states. Fortunately, we don't need to be regulated with what it is that we're doing, but we do work with a lot of regulated entities. We're more infrastructure. We're not asset originators. We want to work within the small medium business lending infrastructure to help all parties just move more efficiently. We're also working in Argentina. We're very, very, very excited about the opportunities in Argentina right now as an emerging market. The system is almost a carbon copy of what's happening in the United States. And it's the same product that we're essentially delivering in the United States is the exact same product and almost the exact same use case in Argentina as well. And we're also in the Bahamas as a point of differentiation. The Bahamas has a very long and controversial history with digital assets. But the government of the Bahamas has always been very forward-looking and very open to using distributed ledger technology to add efficiencies. It's very close. A lot of Americans visit the Bahamas, and the Bahamian government has been amazing, opening their doors and embracing some of these new technologies. There, we're working, adding efficiencies to, creating like private credit lending for things like HELOCs, home equity lines of credit, for example, and then auto lending as well, like subprime auto lending also. So very, very exciting marketplace.
Now, if people wanted more information on the company, where would they go? The website?
I couldn't hear you.
Would people visit the website for more information, Real Private Credit? So if people wanted more information on the company, would it just visit your website?
Yeah, our website is realpc.ai. And you can find me on LinkedIn as well. It's just Cole Snell. Be happy to have a deeper conversation with any of your listeners.
Well, thank you so much for joining us today. I really appreciate it.
Thanks, Melissa. Appreciate it as well.
Thank you for joining the Business Roundup, where we always try to bring you interviews with some of the leading people in business, whether it be technology, finance, or energy. I hope you tune in. I hope you subscribe and listen, and we'll give you updates for new interviews that are coming up. Until next time, I'm Melissa Bill.